your opinion with regard to this pack? Do you prefer some of the smaller names, and iPro like Kunal prefers, and Axis Max Life? Is that where the value lies in your opinion?
So on the life insurance side, see, quarter one of FY26 was pretty soft. I think the growth was somewhere about 5.5% odd. Now, April to November, when we sort of look at numbers, have definitely improved for the industry about 12 to 14 odd percent. Now, yes, concerns on the margins is going to be there and probably going to be there in the second half because distributor payout is expected to be sort of fully implemented by Q4. And I think so. We are very sort of selective from in this space. Our sense is that FY27 would be a sort of a more sort of a normal year. What we prefer is companies which have been sort of focusing on non-par and unit-linked products. So HDFC Life is our preferred pick there with a target price of I think around 860.
Okay, Pankaj, hold on to that thought. Lots more stocks to discuss with you.
Welcome back, and you'll have a slew of stocks where you'll have lock-in expiry also come through, the likes of a Wakefit, the likes of a travel and food services, Corona Remedies. You'll also have a number of, or rather a large chunk of counters come out with their earnings this week. Pankaj, in terms of IT, do you believe that there could be a positive surprise in terms of the numbers going into TCS and HCL Tech today?
Not much. In fact, our sense is that tier one IT names probably could deliver 0.3 to 2.2%. 2.2 would be higher for HCL Tech, and that's largely because of the seasonality, what you see in their software product business. I think so. One needs to be very selective in IT because our sense is that companies like, say, LTI Mindtree probably could do better at about 2.2% kind of quarter-on-quarter growth rate. And besides that, I think KPIT is another stock which we like. I think lastly, see, our sense is that management commentary again on CY26 budgets plus any sign of a discretionary revival. I think those are the things which we would sort of need to look at. Besides that, how the GenAI is sort of scaling up for companies. So result-wise, not much expected. I think it is the commentary which is going to be a lot more important. But within the IT, typical preferences L&T, Mindtree, and KPIT.
The other huge disappointment which has likely come through over the weekend is the fact that you had real estate numbers come through. A Signature Global, for example, which had guided for 12,700 crore of pre-sales numbers for FY26, has done only 2,000 crore in Q3, which means that they've achieved a pre-sales number of 6,700 crore in 9-month FY26, and they've admitted that they will miss their pre-sales estimates for the full year, which looked comfortable, quote unquote, according to them, just a few months back. They've however said that they will attempt to maintain sales at the same levels as last year. Launches continue to remain on track, is what they are saying. Now, this is, of course, Signature Global. You also had an Ashana Housing, which came out with numbers which were okay. Pankaj, do you look at real estate in terms of the numbers and say that you could see a slowdown in terms of the cycle? Or is this just one specific player suggesting that they will not meet numbers or guidances?
So I think in the real estate, one needs to be selective. Our sense is that, see, this was the best performing sector in 2024, delivered about 38% kind of return. 25, it was worst performing. I think interest rates are at lifetime lows. So our sense is that this is not the time to be sort of negative in real estate. But at this point in time, we are very selective. So what we are liking is, say, Phoenix Mills. That was our part of yearly pick. I think our sense is that the consumption is in the malls is expected to grow at 20-odd%, which is what has come out also in their updates as well. And the leasing activity is also picked up for some of their key malls, which is in Mumbai, from say 67-odd% to 77-odd%. The real estate vertical is also sort of doing well. So one needs to be selective at this point in time, but our sense is that we have already seen decent amount of price damage in most of the counters. Most of the real estate companies are trading below NAVs. So I think incrementally we'll sort of turn positive on individual names, not expecting any major fireworks in this particular quarter.
Pankaj, do you
Okay, that's
think?
that on realty.
Yeah,
Just gonna get
yeah.
some more details on realty before we move forward. And a slew of Q3 updates have been trickling in, like Harsh was just highlighting. Rabinda joins in from our research desk with a quick update.
Listed companies has announced the Q3 FY26 number during the weekend. Signature Global, Phoenix Mill, and Ashana Housing. So, firstly, let's start with Signature Global, where company reported a weak set of Q3 FY26 business update. In Q3, Signature Global reported a pre-sales of rupees 2,020 crore as compared to 2,770 crore, which was down by 27% year-on-year basis. And for the 9 month of FY26, Signature Global reported a pre-sales at rupees 6,680 crore, which was down by 23% year-on-year basis, as compared to the actual guidance for FY26 was 12,700 crore, which means company has to do a pre-sales of rupees 6,020 crore in the Q4 FY26 only. And for collection in Q3 FY26, collection stood at 1,230 crore, as which was up by 14% year-on-year basis. And the overall market environment has turned softer than that has impacted the company. And company say that they will not be able to meet the FY26 pre-sale guidance. However, company will attempt to maintain sales at the same level as compared to last year, and launches will continue to remain on track. And for the average sales realization stood at rupees 15,182 per square foot for the 9 month of FY26. And apart from this, Phoenix Mills has also announced that Q3 FY26 number, and it was a strong set of number for the Phoenix Mill, where a company's retail portfolio in the portfolio consumption stood at 4,787 crore in Q3 of FY26, which was up by 20% year-on-year basis. And newer malls continue to scale up well, contributing meaningfully to the portfolio momentum. And for the residential space for the Phoenix Mill, the gross residential sales company reported at approximately 140 crore in Q3 FY26. And for commercial space and hospitality segment, both the segment also reported a strong set of Q3 FY26 number. And lastly, Ashana Housing has also reported their Q3 business update, where it was an inline overall. It was an inline number for the Q3 FY26, and where company has units booked at 357 in Q3 FY26 as compared to 307 unit booked in Q2 FY26, and 450 units booked in Q3 FY25. And value of area sold in Q3 FY26 was at rupees 401 crore as compared to 454 crore year on year. And for 9 months of FY26, 1,135 crore. So overall for Ashana Housing, it was an inline set of number.
Thanks, Ravinda. Pankaj, we're seeing for the last 3 to 4 years, all the real estate companies talking about pre-sales, but we haven't seen the conversions of the pre-sales into revenue. What is your thoughts on that?
Oh, yes. So I think this year a lot of companies have been sort of guiding till Q2 that they'll be able to achieve their full year pre-sales guidance. But yes, some companies are expected to miss. See, in real estate, while yes, residential could be sort of could witness an interim soft patch, but our sense is that on the commercial side, things are pretty robust, and which is why I feel we believe that companies which have got a balanced portfolio of commercial plus residential should do well. So what we like is it besides the Phoenix Mills, something like say DLF and also Max States. I think both the companies have got a decent share coming from the commercial side as well. Commercial side, our sense is that continues to sort of do well. So yes, overall one needs to be selective, but I think, like I said, this is not the time to sort of turn negative on real estate.
Okay, not the time to turn negative on